Hey everyone, Stock Ninja here with more M&A news. It seems like retail is down and out, but Simon Property Group thinks otherwise. They, along with their joint venture partner Authentic Brands Group, have been aggressively scooping up anything they deem of value, especially companies that have filed for bankruptcy. Very interesting, given the general consensus has been that malls have been slowly dying. Let's look to see exactly what is going on here. We will start off by looking at the two companies involved in the joint venture, called SPARC Group LLC. First up is Simon Property Group, or SPG for short. SPG was founded in 1993 by brothers Melvin Simon and Herbert Simon. SPG is a REIT and the largest shopping mall operator in the United States, but also have operations in Canada, Japan, Mexico, South Korea, Malaysia, and Thailand. SPG is a publicly traded company that trades with the ticker symbol SPG and is listed within the S&P 100 and S&P 500 indexes. The company's stock is well off its all-time highs and has been on a steady decline the last 5 years, which really accelerated due to the situation in 2020. They currently own subsidiaries Forever 21, which they acquired in February 2020, Simon Malls, Premium Outlets, and more. The second company in the SPARC joint venture is Authentic Brands Group. Authentic Brands Group is a privately held company that is headquartered in Broadway, New York. The company was founded in 2010 by Jamie Salter, and it currently falls under the huge umbrella of BlackRock, with BlackRock owning a 30% stake in the company. Authentic Brands Group has several well-known subsidiaries, such as Sports Illustrated, Nautica, which they acquired from VF Corporation, Nine West, Fry, and more, totaling 50 different brands. They also own the likeness, rights, and/or estates of celebrities such as Muhammad Ali, Elvis Presley, Shaquille O'Neal, and Marilyn Monroe. So together, they are using joint venture SPARC Group LLC as their investment vehicle to scoop up retail companies that have filed for Chapter 11 bankruptcy. On that note, boy, do they have a lot of companies to pick and choose from. Just look at this list. Their first acquisition was Brooks Brothers, which was confirmed on August 12, 2020. Over 200 years old, Brooks Brothers was founded in 1818 and is the oldest men's clothier in the United States. Brooks Brothers is actually a favorite of mine, and I was quite sad to see them file for Chapter 11, but it was a long time coming, really. The company has been struggling to keep up with the times, coupled with the situation in 2020, and most people no longer needing business attire. That finally drove them to file for Chapter 11 in July. SPARC Group is buying the company for $325 million and plans to keep 125 stores open. That is a huge reduction from the 500 stores that they had worldwide. But given the bleak outlook, they are probably happy to be alive. Next, SPARC won the bid to acquire Lucky Brand, which was confirmed on August 14, 2020. Lucky Brand is a denim company founded in California in 1990. The company has around 175 stores in North America, but the amount of stores SPARC would keep open was not disclosed. According to Authentic Brand CEO Jamie Salter, this deal is set to add $13 billion in revenue to their portfolio, which is insane because they're acquiring the company for a mere $140.1 million. Simon and Authentic Brands will become the core licensee and operating partner for Lucky Brand. On the surface, this looks like quite a deal. Lastly, this one I found quite interesting is that Simon Property Group, along with Brookfield Property Partners, which is another publicly owned company, are in advanced talks of purchasing JCPenney, which also filed for Chapter 11 not that long ago. Reportedly, JCPenney has had better offers, but Simon and Brookfield have offered terms to them which they deem more beneficial to the company. Now, that is all well and good, but the most interesting part about this deal is that Simon is in talks with Amazon to turn these recently vacated stores into Amazon fulfillment centers. Objectively speaking, this makes sense. There has been declining foot traffic in malls for years now, and the locations are usually close to population centers or residential areas to better serve the public. Logistically, this would be a boost for Amazon as well as Simon, having a steady tenant. Not to mention, Amazon will definitely be able to pay the rent. If everything works out as planned for Simon and Amazon, your local mall could be a very different place in the near future. Definitely a lot to digest with everything that is happening in the retail space. Bankruptcies are plenty, but it feels like companies of any value are getting scooped up quite fast. It seems like Simon Property Group and Authentic Brands Group, as well as Brookfield Properties, are not going to let these opportunities go to waste. Throw Amazon into the mix and things are starting to look very different compared to just 6 months ago. So what does this mean? More than likely, not all companies filing Chapter 11 will survive, but those that do might have a huge reduction in their presence as far as physical stores go. If Amazon does indeed start acquiring mall space, they could further enhance their e-commerce and delivery time, but the talks are still ongoing. Personally, I would like my local mall to survive. Sure, I don't spend a ton of time there, but it was nice to go occasionally and mingle with the crowd. So I take what SPG is doing as a positive and hope they are able to save as many brands as possible. That being said, I do not currently own any SPG stock or have plans to buy any in the near future. That concludes this episode of Mergers and Acquisitions. Thanks for watching, everyone. What are your thoughts on the retail bankruptcies and the moves that SPG and their partners have been making? As always, if you enjoy the content, don't forget to hit that like button and subscribe to the channel. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying or selling any stocks seen in this video.